Hello everyone, my name is Matt Cincerello, and I'm the owner and managing partner here at U-Nique Accounting. You can find out more about what we do by visiting us at our website, u-niqueaccounting.com. Also, if you're wondering what I'm drinking today, today's beverage of choice is a TJ's Tangerine Probiotic Sparkling Beverage. I've had a couple of bad weeks of eating and drinking poorly, so I need a little gut check. If you notice my cup, it is bearing the hashtag Make Today Count. This is the slogan for my Best Friends Foundation, which is a close and personal not-for-profit that I'm a board member of. A link will be provided to a form you can fill out at the end of this video if you or someone you know needs help dealing with the impact of cancer in their life. So let's go ahead and jump into today's topic. Today's topic is POS reporting and your financial statements. So sometimes when I do videos, it's based upon things that I've thought about talking and wrote a blog and want to share with everyone. But this got driven because this is a problem that just happened in the past week, and it's frustrating for accountants, and it's frustrating to see businesses go through the struggle when you don't have to. So let's talk about POS choices. There are so many out there. I'm not going to recommend one because really it comes down to what your need is. But regardless of what you pick, your POS needs to give you good, basic data for your daily sales records, your DSRs, that then directly matches your financial statements. Because in the event of an audit, you want to be able to prove that these external programs, so your POS that's basically running your business, matches financial statements that also match your tax return. Okay, this is perfect flow. Your POS needs to make this process easy for you. If you're listening to this video and you were like, this is not this easy for me, or yes, I have those problems, I'm telling you right now, kick your POS to the curb. It's probably antiquated or isn't as sophisticated as the more cloud-based versions are today that work with delivery platforms like that, as opposed to having reconciliation issues. Find a better POS. It'll make it easy for your employees to operate on a day-to-day basis. It'll make it easier for you to reconcile and look at your sales records on a day-to-day basis. It'll make it easier for your accounting. And at the end of the day, if an audit were to happen, you're basically covered that what's there in your POS easily matches your financials and you can feel safe and secure. So you want to make your POS easy for your data entering or data integration. Now I say data entry because there's still people out there doing that. Almost every POS out there should integrate with your accounting software. There's third-party softwares that do that. Some do it directly, but the key is you shouldn't have to be running a report and then hand typing it into your computer. They should sync, and that should eliminate a lot of your daily effort. And so in order for those to work, some POSs don't work that way because they're too complicated and they have terrible reporting. Ditch it, because a lot of them out there have better reporting, and then they sync with the accounting and all your work is done. So you want to make that process easy. Then not only do you want it to be easy to get it in, whether manual entering or direct integration, but then you want to make it easy to reconcile. We entered it in or integrated, but what's in my POS, what's in my financials, do they match? How fast can I reconcile that to make it an easier effort? All right. And so the POS we're using right now that our clients basically convinced to get out of it does all this terrible. They do not have out of the box reports, standard reports that every other POS has to give you a good DSR report so that you can see net revenue to easily put that into your P&L, as well as collections with sales tax and tips and tender collections. So those are all reconciled easily on a day-to-day basis. So if your report doesn't follow this standard format, which should start with gross sales, and then it should subtract out discounts and other adjustments you did on those checks with your customers, add in other charges like service charges, auto gratuities, delivery, food charges, things like that. And basically there's other things in between there, but you want to get to net revenue. So you want to start at gross revenue and get to net revenue. And then all that P&L data with gross sales, discounts, service charges, all those should tie to chart of account records in your P&L every day, dollar to dollar, penny to penny. Then after revenue, it should be now, okay, here's what I sold, what did I collect? So you should have collected all that revenue plus tips that your customers paid out to your employees, and then sales tax that you also collected from that. Because then at the end of the day, the IRS and also your accountant wants to know what were collections, and then you have to look at your payment processor to see what collections you got from that. I got clients who didn't realize the payment processor missed a payment to them because they weren't reconciling it, or they could never tie a day's worth of credit card transactions to an actual deposit. They just assumed it was happening, and then you can dig in and find out that no, if you do your entries the right way, you can see the collections coming in, you can see oh, this week got missed, this week got missed. It's rare for that to happen. I don't want to scare you, but it does happen. Then you want to make it easy to compare this POS system, which is an external program. Again, if you get audited and someone asks you for your financials, the POS is not a financial statement. While it's great, it's a great system that gives you so much data, it is not a financial statement. It does not work. You need to have a POS that gets recorded into a financial statement that ties to a tax return. So what you want is you want to be able to take this POS report, your P&L and balance sheet, your financials, and know that every day they tie penny to penny. And then that way, when it comes to reporting sales tax on a monthly basis or quarterly, whatever you got to do, or tax returns, and then in the event of being audited, you're going to know that they're not going to find everything because there's nothing hiding. Your POS has this report, financial statements tie penny to penny, no adjustment, move on. You can live a stress-free life and not have to worry about what will happen in an audit. That's all I want to talk about, is the fact that if you have a POS that's just causing you headaches in your operations, headaches in your reporting, and headaches with slowing down your accounting, get rid of it, because there are plenty out there that make it easy for you to operate on a daily basis. So thanks for listening to our advice on the POS and your financial statement reporting. If you appreciate our advice, please remember to like our video and subscribe to our channel for future content. Until then, remember, don't conform, stay unique.